In this episode, my friend Nurse Kathi and I discuss her discovery and journey into the infinite banking concept. Now, I'm telling you, she did an outstanding amount of research prior to paying a premium and getting started. She's worth listening to. I had a lot of fun having her on as a guest, and I'm sure you will enjoy it. Thank you for listening. Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm as excited as I have ever been because Nurse Kathi is with us today. She's agreed to, carve out some time for us and share with us who she is, what she does, and then how she became exposed to the idea of the infinite banking concept. And she's as, salt of the earth people, just cool as she can be. And I'm excited that you, the listener, has an opportunity to hear her. So welcome, Nurse Kathi. How are you?
I'm good. Thank you for having me. It's really an honor to be here and something I didn't ever really expect would ever happen. So really happy to be here.
Well, let me say that I think that you and I began talking a little over a year ago or so. Mm-hmm. You've become a client, but you had already done some research, and you're an accomplished professional. So let's start there. Just share with us, who you are and kind of what you do, Kathi.
Sure. So as you said, I'm a nurse. My specialty is newborn intensive care, and I've been doing that just about 27 years. So not quite 30 years, but a really long time. Really a passionate educator on anything to do with sick and small newborns. And about a decade ago, started my own consulting company specializing in baby neurology and teaching physicians and nurses how to read baby brains, MRIs, and set up different programs in their hospitals. So I travel and teach and help them to set up the best environments for families and babies to grow better baby brains from the beginning.
That's awesome. How's the travel been the last, 12 months or so?
Yeah, non-existent, which has been a huge change for me over the last 20 years of really traveling the world, but gave me time to dig into these concepts. And I think that's, the hidden blessing in having a lot of extra time and not traveling and being so busy was a chance to really reflect on where I was financially, whether or not that was with protection, just learning new concepts. And I'm a lifelong learner, so it was just one of these things that YouTube brought me to here.
Well, perfect. Expand on that. So you have some extra time.
Yep.
And you're reflecting on your financial position, and so you go onto YouTube, and so that's a lot of ground between then and now. So, share with us your whole thought process, if you would.
Yeah, sure. So, if I really reflect back, how did I get there? I was trying to think about that this morning. It seems crazy now to even think that I didn't know about this, but there definitely was a time. So I would think I was looking for some new kind of innovative strategies on how to pay off my house, to be honest. And I was should I, accelerate my payments? Should I, I just was kind of thinking about this as a goal, something that I could try to accomplish was to pay off my house. And so then that took me down kind of this bubble, and I ran into some videos around velocity banking. And somebody in one of the videos I was watching, I got really interested in kind of understanding this difference between daily accumulating interest versus kind of our traditional mortgages and, how to leverage daily interest. And so that really, I'm kind of a math nerd, so that really, really intrigued me. And so I thought, what is this concept? So I just really started digging into that idea. And then somebody in one of the videos said, and if you really want to turn this over, you should try infinite banking. And I was like, infinite banking? That sounds kind of cool. And then I just found Nelson Nash Institute, started listening to videos there, just was watching tons and tons of videos about illustrations and how you take out loans, and literally just consumed hundreds and hundreds of hours of content. And of course, your channel was one that came and really, I thought that connection between you and Nelson Nash, it was just like this great synergy. And so I booked a call with you.
And I'm going to use a math nerd if I could.
Yeah, sure.
Because we had lots of phone calls. You were very inquisitive. You had a lot of legitimate good questions, and a lot of them. And we spent some time.
Yes, we did.
Going through a lot of different. We deconstructed, some of the ideas that really resonated. Were good ideas, but there were some adjustments that were made.
Yep.
And so I don't know. We had several calls, and then you just go through the process, and so I don't know when you first actually became a client, purchased policy somewhere.
I think it was maybe 8-9 months ago. But
okay.
It took me a good 2, 3, 4 months of researching, double checking, checking in with my partner and saying, is this a good idea? Should we do this? He was a little more skeptical. I made him watch some things. I reread the book. I listened again to podcasts. I literally just, and I don't know that everybody needs to go that deep. I guess I could give a backstory on I had purchased a universal life policy about 6 years ago. And so I like to say I had the right idea, but the wrong tool. And so I already had this idea that I wasn't going to be investing in 401ks anymore. I was looking for an alternative. And so I think that I was already interested in something different, but again, I felt burned by the other tools. So I think that made me more studious and more responsible this time to just really understand what I was buying, understanding the mechanisms, and to be sure that I was really confident in what I was going to do with it, why I was doing it, instead of just, this is an alternative 401k, and just trying to kick that to the curb. And I feel like that's what I probably did in the last situation. I didn't really understand how the policy worked. The other thing is that the other agent was never, ever available. And so I think that, just having so many calls with you say it on the podcast, you just call Julie and but these are like real people. I know it's hard to believe when you watch it from the other side of the screen, but these are real people. You get on the phone, James actually calls you, and Julie, emails you, texts you. They give amazing customer service. So I feel like that part of it just also gave me confidence that, I wasn't getting myself in another situation, and, just had done my due diligence. And, at some point you say it's all rhetoric, so you write the check. And at some point I just decided, well, guess it's time to write the check.
And good job, because it was past time, but it was, I say past time, and it really is all conversation until somebody writes a check. But you can only go as fast as each of us, we can only go as fast as we can be comfortable with. Not that we should always remain in our comfort zone. And, we have to be open to new ideas always, right? So you're a lifelong learner. I'm a lifelong learner. And, the older I get, the less change I like. Mm-hmm. But, it's got to be balanced. I got to have an open mind. Open and free debate is good. Why is universal life? Why is that the wrong tool? I think you pretty much discovered that on your own.
I did. Mm-hmm.
Right. And then I got to say 100 hours of any topic that's a lot, right? But I think it's important, and we're all different. Some of us need more than others. And I would rather personally err on the side of being too conservative or too much knowledge on a particular topic. And then the balance is always, how much time, is it going to take to actually make a decision? But do you feel like...
I guess go ahead.
No, go ahead.
I was just saying, at some point I realized I wasn't getting any younger, so I better just get on with it.
Right. So did you feel like you had to become a life insurance expert? You did learn a lot about product differences because you discovered on your own that you had the wrong tool, and maybe the lack of attention accelerated that, that's nothing new in the financial world either.
Right.
A product is sold, a product is purchased, and then all of a sudden you're instantly orphaned.
Yeah.
So I'm sure that accelerated, your discovery of maybe you owning the wrong tool. But do you feel like you had to be a life insurance expert and know all the mechanics of a life insurance policy?
No, I'm sure I thought, I was definitely was more educated than I ever was before. And of course, if you're going outside the box and you're trying to talk to your partner about it, you kind of feel like you have to know a little bit enough that you can explain what you're doing. But I think, again, I guess I would go back to Be Your Own Banker, the book, and you guys preach that all the time. Once you understand the concept, then I think you really just dive in, and you're the agent, so you would answer all the questions I had, like how does this work or how does that work, and as soon as you just kind of realize it's not an investment, it's a savings, it's a bank, and it's you save money, you got to put your money somewhere, so why not do what the rich have always done? Why not do something that's very old, something that I always like what you say about it predating the IRS and these other 401ks, and I was just ready for something that was off the beaten path.
Perfect. And then your partner, I don't think travel really slowed him down much, right?
No, it hasn't.
COVID didn't slow his travel down.
No, yeah, he's been really busy.
So you did have to, learn enough to convey it confidently, and that's a difficult challenge in its own, right? Because typically, and not just within the infinite banking world, but anytime we're exposed to a new idea, something different, but in the financial world, we're often put, and I don't agree with it, but we're often put on the defensive, not by our partners necessarily, although that does happen sometimes, but by every other financial professional guru, because the more successful someone is, the more professionals they're surrounded by, typically, whether they're CPAs, attorneys, financial advisors of whatever sort, and which is okay. That's good. And my position has always been there's room at the table for all of the professionals if the customer, if the consumer, if the client, if their best interest is truly at heart, then there should be room for everyone. Right. But then you get real territorial with, attorneys and viewpoints of CPAs and life insurance or investment and whatever. So I'm not saying it's always a love fest, right? But you typically get pushback and you're put on the defensive whenever you discover this idea and you want to share it with people. The attorneys are typically like, my gosh, that's life insurance. You need an ILET, or you need to be in a trust, or, you don't need the cash value. Look at universal life or look at whatever for estate planning. Then the financial advisor is like, wants you to explain to him how dividend paying whole life insurance works. And he already thinks he knows, and they're already an expert, and it's very hard to teach anybody or someone that knows anything, right? And then you're typically put on the defensive. I don't agree with that, but it happens.
And there was I think you call it noise, and there's a lot of noise, and there's even noise amongst your family and friends and people who are well-meaning. And I think at some point you just, at least for me, I just said, I decided this is what I'm doing, and just stopped listening to the noise.
Right. And either they respect that or they don't, and then the discussion pretty much ends, right? And I pretty much, I always say and encourage that, because once we embrace it, it's even like health, and we'll get into health. I want you to share more on what you do. But once we embrace something and we believe it's good, we want to share it with everybody that we love really and care about. And then you do have to go, we're all surrounded by the noise, even the professionals and our family members. And it's just, it's an awkward situation, but some will hear, some won't. Nelson used to say, and I completely agree, it's obvious, it's evident that this is more caught than it is taught, right? And then once you get it, or you've caught it, you've got to do your own vetting. You've got to do your own research. You've got to make sure it's, fits your philosophy, your values, and then your partner, the people that you love. You can't, we as in our process, husbands, wives, partners, they have to be on the same page or they can't become a client. It's so important. You cannot work against each other. Now, it's quite often too that we find, somebody is typically more interested in finances, or they handle all the finances and the other one may not. And, well, I love them, so whatever they decide, I'm all in. That's okay. But when there's like diametrically opposed, no, I'm not doing that ever, and neither are you, it's a contentious situation that doesn't typically work out.
Yeah, for sure.
But you did your due diligence enough to explain it to your partner.
Yeah. I mean, we still have I've done, obviously, with having done so much initial research and then continuing to listen to the podcast and, your Q&As and all of that. I mean, I continue to learn and I continue to go back to the books you recommend and review those. And so I might pick up a nugget here and there and share it with Marcus and say, here's what I learned this week, or here's what I heard, or, just continues to validate and help us have a deeper understanding of, what this kind of thing is that we've decided to do to become your own banker and to, be able to, capitalize a plan that can help you in the future when you need it.
Yep. And I'm excited. We're still on the early end, and we were just getting going. We're just getting started. And I need to bring this up because, we've had several conversations, and in one of them, because you're a coach, and I want you to expand on that.
Sure.
You are a coach. I mean, you teach medicine, to a lot of people and have done that for a long time. But you said this, and we kind of agreed, and I wrote this down because I do mentoring, you do mentoring, right? Mm-hmm. And we agreed, and this is straight from Nurse Kathi, okay?
Okay.
She's like, invite everyone, work with those who come toward you, and mentor the committed. Do you remember that?
Mm-hmm.
I mean,
Yeah, it was a quote I actually heard from, in a lecture, and I believe his name is Seth Resamy, is who I believe said it first. So if I don't want to make sure I give credit to where credit is due, but it really resonated with me, and it was in, part of a network marketing business product, kind of a business education, and trying to, in those kind of situations when you are doing network marketing or sales or in anything really, especially in what you do, it's invite everyone. I mean, I think this is always true, and work with those who come towards you and mentor the committed. I mean, I just thought those three little statements really play out in so many different ways in our life, and this is, I think that's kind of your model too.
It is. I love it.
Everybody.
Yep. When you said that, I'm like, oh my gosh, I love that, and I'm going to use that. This is the first time I've used it, right, in a broad context.
Yeah. No, it's great words to live by, especially especially what you do in teaching, but all of us, I guess.
Right, and so, okay, so share with us, just continue. You've gotten started. We're at the early end, and we're still, building. And what are you doing? Professionally. Share with us what you do and how you do it. I mean, I know what you already said, but. Go deeper. Yeah,
so I mean, I guess I always usually say, I'm a nurse by training. And then I worked in the hospital for many, many years and then started my own business. And so I've been self-employed and building businesses at least since 2006. So I guess that's 15 years now or so. And, I think as you kind of move from being an employee to self-employed, you learn lots of things you never, ever expected to, especially as a nurse. I didn't ever think that I would need to be thinking about my own retirement, my own insurance, my, just my own savings tools and, capitalizing and making decisions on cash flow and, how am I going to invest now versus later, or do I invest in my business or save for a 401k? So, I think just becoming an entrepreneur and business owner, you learn all sorts of things that you weren't initially trained to do. And, I think financial stress is a reality for many nurses. And so I think I've always wanted to make sure that nurses felt empowered to start their own business, to, start a side hustle, find a way to double their income, become less dependent on the hospital systems, to be, more independent. And, I've been blessed to be able to do those things. So I really do want to help others in their self-care, and I love if I can revolutionize healthcare, which I don't know about, but definitely helping nurses with their wealth care is something that I think, and I see nurses who just get stuck. They get stuck in passionless purposeless jobs because they are tied to a pension, they're tied to a 401k, they're tied to a benefit package, and they don't love their work anymore. They don't love being a nurse anymore, but they stay. And so, I feel lucky that I was able to get out young and find my own path and still stay connected to my profession and to my specialty, but to do it on my own terms, and that's required myself to continue to learn and develop so that I can be the best business owner I can and take care of myself.
I love that. I think, and I often say, we have forgotten how to be free in America. Mm-hmm. And so if we remain in our comfort zone, tied to a pension, tied to an employment, tied to a profession, tied to, whatever it is, it's easy to lose the love, and it's easy to lose the passion for, your profession. Once you get outside of your comfort zone, and that doesn't mean you have to leave your profession to get outside of your comfort zone, but that's where success is, and that's where freedom is, in my opinion, is outside of your comfort zone. Mm-hmm. And I tell young people all the time, you have to become comfortable being uncomfortable.
Yep.
You have to. And it's okay to, because the outside, on the other side of your comfort zone, is where freedom is. And you cannot be free without being financially free as well.
Yeah.
Right. So that's where it is. And every path is different. Every passion is different. But whatever your comfort zone is, get out of it. Right.
Yeah.
But
I think it's those things like if you're, maybe you do love your work, working at the hospital and the staff you have and the people you mentor and the new students you have. I mean, maybe you do love that, but that doesn't mean that you can't find that freedom, financial freedom, in other ways, that you can't do things like becoming your own banker with the income you earn at the job you have and the job you love. I happen to be self-employed, and so it fit in with my model, but I think that people who are employees are probably even have been sold the lie that you talk about a 401k. I mean, I started contributing to my 401k when I was 21. I mean, I was always about compounding interest, and I read all the books and did all those things. I knew the value of starting early and those things, and luckily I did. But I also took money out of my 401k to buy my first house. Like, I was never afraid of leveraging what I consider my money, and and that is, I think, a powerful thing that not everybody feels that. And certainly, like you said, I have had advisors say, you will never recover from this. Like, do not do this. I advise against it. And then you just have to say, well, I'm going to disagree, and I'm going to, I'll own it if it ruins me, but this is what I'm doing. So,
wow, that's probably the most powerful statement I've heard. This will ruin you, and you will never recover from it.
You will never recover.
Yeah, he probably.
Wow.
Yeah, I don't know him. But
I guess evidence to the contrary at this point.
Is it? Do you see that evidence in your own situation? You see the evidence that's contrary to that statement? I love that.
Yeah.
I had a conversation with a client, I think last week or earlier this week. I think it was last week. And she, relatively new, as a client, substantial premiums, and they're actively using it in their business. And a financial professional told her that, no, what you're doing will never turn out like you're explaining, and the company will not pay dividends when there's an outstanding loan. Mm-hmm. Well, whether he knew it or not, they have substantial outstanding loans because they paid substantial premiums, and they're financing a substantial business that has substantial cash flows. So she knows to the contrary. He's sitting across the table from her telling her this isn't going to happen whenever it's actually happening. You know? So I love that you've seen the evidence to the contrary. I love that.
Yeah.
Now,
it took a lot of hard work too, but but it's evidence to the contrary.
Right.
I mean, I don't know if that was or wasn't the right decision to make in that moment, but I made it. I had my reasons. I did it. I've lived with the consequences, but no, it didn't ruin me just because I took money out of my 401k to buy a house when I was young.
I love it. And they can read too, right?
Yeah.
I mean, they have some kind of degree, some kind of educational training and experience in the financial world. That surely they can read statements. So if they can read statements, they can read books. But did they?
Absolutely.
Do they do the work? I don't know. But they have an opportunity.
No, I mean, I think the other thing that just, I guess, that you've talked about a lot, I've seen some of your older presentations and things where, you talk about the lies of the 401k. And I think, I did wake up to that lie, many years ago after contributing to one for a long time and still have some money in it. I did take advantage of the opportunity to take a lot out last year. I took out every dollar I could, under the CARES Act because I wanted to. And I was like, I need to get this out from under the, hold of the government. And, I still have money in there. But, when you're 20, 59 and a half seems a long way away. When you're 50, 59 doesn't seem so bad anymore. So it'll be here before I know it. And, it's one of those things that, fine. I don't need that money. It's hidden. I guess I can consider it, backup money if it's there. And if I really, really need it, I can get at it. But not without penalty, and not without penalty for the last many years. And there's, again, only that short window where you can take it out. And then I know my dad even told me, when he turned 71, he was like, I don't want that money out. And he had to take it. And I think that part of just how much control you give away of your money, and I think, but if you don't know where else to put it, it's better than putting it nowhere. It's right. It's better to have saved it in a bad place than to have never saved it. And for many years I didn't save there, and I didn't have a life insurance policy that I was funding. So, for those years in between when I didn't know better or didn't know that this existed, I probably wasn't the best steward of my money in those times, but I just didn't know. I knew where I didn't want to put it. So I invested in my businesses, I invested in myself, but I wasn't using every tool that was out there. And so I think that's why whole life and understanding just the short-term benefits of it, the long-term benefits of it. And, it does take time, like you say, it takes time to build these policies to a place where it will provide the things that will provide, but that time is going to go by anyways. I'll be, every year passes and you get closer and closer to the performance that you see on the illustrations. And like you say, it will probably even potentially outperform that. But if nothing else, there's at least the guarantees of what is there and what I've contributed in the tool, how I can use it.
Mm-hmm. And then, what can you do? What can any of us do? What can each of us do in a 10-year time period with the capital that you do have access to? Oh my gosh, there's the only limit is between your ears. That's it. So, and I agree that this is a habit that we should all have, is saving money somewhere, understanding the difference between saving and investing.
Yes,
and then,
that's true too.
Yep. And then recognizing that the best investment is you. The best investment is you, your health, your intelligence, your knowledge, you, right?
Yeah.
And then, of course, especially, the all-American family, we're all working, and then enjoying the time that we're not working. Then if you're in business, we're all building. And the idea of having to worry about your money is just an added burden. So if you have a strong foundation, a clear path, and you start, the earlier you start, no question, the better it is, because the longer that, whatever that is in existence. So I'm just saying, if, we have a clear path, it doesn't have to be esoteric, it doesn't have to be presented better than it is. I mean, if it's like, when it comes to the infinite banking concept, correct foundation, correct structure, get to it, do what you were going to do anyway. Nelson always said, and he's so true, that we should all be in two businesses. Whatever it is you do for a living, and then you should finance what you do for a living. So that's very easy for the entrepreneur to understand that and to see that. And then it's a matter of capital. How much capital can I redirect or use as a premium, a cash flow, right? Loans, loan repayments.
Yep.
And then, but for the all-American family, it's the same. That every household is not really different than a business, right? There's an income and there's expenses, and we're all financing major purchases. So you don't have to be a great big producer and entrepreneur to practice the infinite banking concept. You don't.
Right.
So it's a beautiful thing.
Like you always say, like the illustrations, just move the zero to wherever it feels good for you, right? I mean, the concepts are the same. Just move the decimal point, delete some zeros, start wherever you can. But I love that the book brings up just the equipment financing and, our car purchases. I think, I don't buy cars that often. I'm kind of one of those people who buys a car and keeps it for 10 years. But, I think the concept, you can see it, right? And I think it's a tangible thing. We've all probably done it, right? If you're over 30, at least, you've probably at least bought 1 or 2 cars in your life. And I probably bought more cars when I was younger. And now I like this one. This is fine. But I think that idea of trying to wrap your head around, like, what do you mean I need capital? Well, it's like every time you go to ask for a loan, that's capital, right? You're requesting it from someone else, but why not just use your capital? And I think the other thing that was really attractive about the whole life banking, becoming your own banker, was this idea of using your money twice. Getting 2 uses out of your dollar. Like, so you pay for premium, but then now you have this place that you can borrow from, and that then I can repay it on my terms and when I need it, and not have to necessarily go to a bank to ask for that, but to become my own banker. And so I loved this idea. And what I'm using my policy for is to help me pay my taxes. So I always saved, because I'm an independent contractor and my own business owner, I'm saving every month for my taxes. And so that's how I funded my first policy. And then I used that and then just repay myself the money I save every month anyway. So that's my idea of, I have this place I was saving for my taxes anyways, and then I was already going to pay a premium, and then why not just continue to utilize that?
And we didn't get above 3rd grade math doing that, did we?
No.
I mean, and it's so natural. You're a naturalist, health. Isn't this a natural solution to money?
Yeah.
I mean, oh my gosh. And I don't have to be beholden to, a guru. I mean, I believe we all need coaches. I think so. I'm not, I just don't believe that we should all be beholden to, a financial expert or a health expert. We should learn enough about our finances and about our health and everything else that we're interested in so that we can be competent. Now I want access to the professional. I want access to the expert. I just don't want to be dependent upon them.
Yeah.
Right.
Yeah.
So it's a beautiful thing, in my opinion. This is a natural solution to money. It is because, money's just a tool, but it's got to reside somewhere. That's the medium of exchange that we use. I mean, it's a beautiful thing.
I can't wait to have my money in my bank instead of someone else's. And I know you're helping me build a bigger bank, but it's just those things of, you have to start somewhere. You have to start with your comfort zone and get your feet wet. And like you say, we all start too small. And but you've given us some strategies to help us, lock in age and lock in health, and give us some ways to utilize our policies over time and to convert things in the future. So we've taken those steps so that we can do those things. And in the meantime, while we're learning and while we're figuring out how does the cash flow all go, and how do you wrap your head around paying a premium, and just the mechanics of it all. I think it takes time, and there's really no substitute for just taking the time and getting the experience and incrementally, like you said, once you grasp it, why diversify? Just keep doing more of what's right, what you know.
Yep. No, and without patronizing, I'm very proud of you, and I'm very proud of, your partner, and because y'all have laid the correct foundation, right? And then you've even laid out the path to continue to expand. Once you wrap your mind around, I'm doing this anyway with taxes, it's just sinking fund method. I'm accumulating money here to pay my taxes. Just don't pay your taxes one year and see what kind of property and asset swaps hands, right? But then that's a major thing. There's no question. It's very major, but that's only one thing that you're financing. Right?
Yep. Yeah.
And
wait till I need a new car. It's happening soon.
Right. And that could probably be done in addition to the taxes at the same time.
Yep.
What a concept, right?
Imagine that.
Yeah.
Yeah, Marcus did his car already. He had a loan outstanding, and we converted that into his policy loans. And so he's learning how to do that and structure that and how we manage the cash flow about that. Yeah. So it's a matter of getting it and, understanding enough, asking the questions from your mentors and calling the office, and then, just
taking action.
What you're going to do anyways.
That's right. Take the action, build the entity, build the bank, start the policy, pay a premium, go through underwriting. As boring as all of that is, as time consuming as that is, it's worth it. Right? So
absolutely.
Perfect.
Well, I think the other thing I've learned is just that, at least along the way for myself, that no one really ever talked to me about what it really looked like to be properly insured. So, I don't have kids, and so I never really thought about life insurance. I had, a small enough policy to pay off the house and to leave some money to, to support others. But, I didn't. And maybe other people who have kids think differently of like, oh, I definitely need to have life insurance. I didn't feel that need, but I think that just learning how likely most people are probably underinsured. And even when we got our first policies and you said, you're still underinsured, if you really just run the numbers and look at your age and look at your health and look at your income, and again, those numbers are different for everyone, but it's just, income times time. And if you realize that life insurance is designed to be, a replacement of income, and no one ever told you that you should take what you make and multiply it by 20 or 30 years. I mean, it's easy math, right? Like you said, third grade math. It's, if you earn $100 and you're going to live for 30 years, that's what you should plan for, right? It doesn't, I guess no one ever really told me like what would be the right amount of insurance. And I never thought of it as income replacement. I guess I always thought of it as legacy, or you leave it to take care of others. But I never thought about it as an income replacement. And once you wrap your head around that, then the numbers become clean. And then you can realize, okay, I'm there, or I'm getting closer to what that really means. That's awesome.
And, thank you for even bringing that up. That was a kind of an educational, conversation or two. The numbers when it comes to life insurance, we're all limited in how much we can have, and then we're all limited in how much premium that we can pay. And we're limited by, the construct of life insurance and the National Association of Insurance Commissioners. It's not, these companies don't just come up with arbitrary numbers. And you're exactly correct. Most people are underinsured. I'm very proud that to be a part of, you and Marcus, y'all's financial picture, because y'all are properly insured. And you didn't even know that you weren't, or even what that meant, or how to even calculate proper insurance for someone. And then that's just the death benefit, right? Then you have all the cash values, income replacement. If your partner graduates early, the income is replaced. Oh, but wait, since you're a healthcare professional, the odds of y'all graduating early would probably be accidental. Y'all are probably going to live to 120 years of age, right? And,
let's hope so.
Right. And
as long as we're having fun, why not?
Exactly. And having fun costs money.
Yes.
It costs money to live. So all of that cash value is accessible in retirement, quote unquote, passive income time in future years. Oh, wait, all of that cash value is accessible for tax-free income. What a concept. And then we're still going to graduate. I don't care how healthy you are. Nobody's getting out of here alive. Right. And then even if we don't have people that we love, we don't have children, our partner graduated before we did, you still have entities and causes that you love and want to support and continue to support currently. And so, it's okay. They can be a beneficiary for that net death benefit. What a benevolent, altruistic idea. Life insurance is really a noble financial product. So, I appreciate you bringing that up.
The other thing is, if all that doesn't get you, then wouldn't you want to at least do the secrets of the rich? I have nothing else. Like, if this is what rich people do, like, of course, I want to put myself in that category with, families who create this, generational wealth and, leave these legacies. Like, why wouldn't we want to just do the things that others have shown us do create generational wealth and those things? I just think it's also another thing to just say, why not take those secrets? And they're not so secret, but you feel like they are when you're in the conventional world.
Right. Yeah, why not? If you don't, who will? Right? Yeah. If you don't, who will? So it's okay to be a leader and show everyone the way. The ones that get it, great. The ones that don't, invite everyone, work with those who come toward you, and mentor the committed. I love that.
Yeah, I love that.
So share with us about your passions in the healthcare world. More. Yeah,
so I have many. When I talked about, helping create better NICU environments, so newborn intensive care environments that are, more nurturing for families and babies and their little brains that they have to live with for their whole life. So that's really consumed most of my professional life. I got really interested in kind of natural things and understanding about non-toxic. I learned about toxicity and chemicals and those kinds of things and got really engaged in, why are we using so many toxic things in the hospital, in this place, this healing environment that we're trying to create? Why do we paint the walls with paints that off-gas and give asthmatic kids issues? And why are we using cleaners that cause our housekeepers to have respiratory disease and asthma? And, it didn't make sense to me that in healing environments that we would be using such toxic chemicals. But to be honest, they're out there and available, and most of us would not be thinking that those things are bad for us, that, if we can buy them, they must be tested and safe, and it's just not true. And so I started kind of on a mission to, green hospitals, got really involved in some organizations like the Alliance of Nurses for Healthy Environments, and started teaching others about, just these little hidden poisons in our life, things like perfumes and, pesticides, and just trying to help people identify the bad stuff and start to kind of change their lifestyle so that they can understand how to live a little more naturally.
I love that. And so do you, have you made, and this may be too personal, you don't have to answer if you don't wish to, but have you thought about when you graduate supporting those types of institutions?
Oh, yeah, 100%. Yeah. I mean, of course, children's health is really important to me. Poverty and, inequities and those things are very important to me. So I give to those organizations already. But yeah, it definitely is part of our long-term planning is to give to some of these organizations that will continue to do that work.
Right.
Nursing schools and creating scholarships and, all those kinds of things, are things that are in our path. Right.
I mean, that's part of the legacy. You don't go anywhere in the world without rich people's names on buildings, and especially in the medical world and universities. People donated money, right? And that's why their name's on there, right? So, and they've graduated, so they made provision for the passions that they have.
Yeah.
So,
yeah, absolutely.
Life insurance helps on that. Perfect. Well, is there anything else you'd like to share if we come to?
No, I guess I would just say to, trust the process, trust James and the team, do your work, follow what he says, read the book again, read it again, read the other books. I would say that the case for IBC is probably one of my other second favorites that really helped to outline, a little more about banking. That would be my second suggestion after people do really absorb that. I mean, I followed all of your instructions. You said, read the book. I mean, I think I had to watch your book review before I could even book a call. So I did that. And then I just, ordered the 10 hours of DVD. I did all the things and just continued to learn as much as I could. And I think back to what you asked earlier, I don't feel like I know anything about what it would be like to be a life insurance agent, but I understand fully what I've purchased and how I plan to use it. And if I have questions, like we just called you 2 weeks ago, I was like, we have this question, we have this credit card bill and we have the cash, should we pay it off? What do we do? And, and you just walked us through the mechanics of it just to help us continue to better understand next steps, how to optimize, how to use it. And you guys really are an open book. I mean, you really do answer the phone. I mean, anytime. You answer emails so promptly. So, I mean, I think if you are going to go down this journey, you need a good partner. And, that's how I see you and your team as good partners.
Well, I appreciate that. I didn't ask for that. Appreciate you sharing.
I promise he did not.
But you don't feel dependent upon us, though.
No.
Right? No, I like the word you said, partner. I like that. So, I appreciate that. I like that. And you know what? I appreciate the fact that you said and did actually everything that we encouraged and asked you to do. You did it. And was that beneficial or helpful for you and Marcus to understand why and how what we're doing?
Yeah.
So, you didn't die, right? You didn't die, right?
No.
You're okay.
I think you're a busy person, and I think, in order to respect your time, I felt like I needed to do the things you asked me to first so that we could have, in-depth, intelligent conversations about the things that I still wondered about, or the things I didn't understand. I mean, you can't possibly have already curated all of these hundreds of hours you don't need to do that again for me. You need to just answer like my unique situations or my fears, my worries. You need to help me personally, but like the concepts are the concepts. And I think that you've provided more than enough free content that at some point I just felt like I can't ask him anymore. I've asked him 1,000 times, and at this point we need to have a business relationship, or it's just not fair anymore.
Oh, well. Thank you. You felt obligated.
Well, I guess not obligated, but I felt like, I guess I don't want to say you earned my business, but certainly I felt like if I was going to do this, begin this plan and this path forward, that, the relationship was important to me. I think just after having been burned so much, or just burned in the past by that other relationship for insurance, that, this was a big step, but also I just, again, wanted to make sure we had a partner in it, and that, that we got along, right? I mean,
right.
That's important too, if you're going to rely on somebody in your team.
No, I completely agree. Complete alignment with that thinking. I don't want to work with people that I don't like. I'm not going to work with people that I don't trust. I'm not going to work with people that I'm not confident in their abilities. And I don't want to work with people who don't respect their own boundaries, right? I don't practice outside of my abilities. I know some of the best attorneys in the country. I know some of the best CPAs in the country, neither of which I am, right? And I don't want to know what they know. I don't want to do what they do. I want to do what I do, and I want to do very well what I do within my abilities. And that may not be for everyone. That's just me. I mean, there's very kind words, and I'm very appreciative, and I align fully with that thought process. So thanks for sharing that.
Yeah.
I knew.
So can I add one more thing?
Sure.
Just in case it resonates with somebody else. So I think it was on a Wealthability podcast that I listened to from time to time, and they had this concept of buy, borrow, and die. Have you heard this before?
No.
Buy, borrow, and die. And so, I think some people buy real estate, borrow against it, create assets, and then you die and you pass those on. But I think life insurance is this way too. It falls into this idea of you buy a policy, you borrow against it, and someday you die, and if you paid the loan back or you didn't pay the loan back, it's collateralized by the death benefit. And so I thought this is a really simple concept to also talk about related to life insurance. It's like you are buying something and you get something in return. You can borrow against it, and then someday you die and you graduate and you have this benefit as well. So.
Oh, I love that. My only addition to that would be, and you mentioned it, if you pay the loan, you got to be an honest banker.
Yeah.
Right. And so we're all making purchases. You mentioned cars earlier, and I drive my cars into the ground. They're at least 10 years old. Well, if I have a partner and they do the same thing, we're still buying cars every 5 years. Yep. Then if I have a partner who really likes sports cars or whatever, we might be buying cars every 2.5 years. Right. So, and too, I'm going to touch back on your father too, his comments, because, okay, so I'm going to buy a car. I've got to have cash or access to capital to make a purchase.
Yes.
So if I have not developed discipline, then I'm going to be beholden to the third-party lender to make that purchase. I'm going to go borrow money to, make the purchase. Then I'm going to make loan repayments until that's paid off. And then I'm going to buy another car, or, well, in this case, cars. And so there's always a cash flow. I'm either saving and spending and resaving for the next purchase, or I'm borrowing, making a purchase, and making a loan repayment.
Yes.
The cash flows are no different. But at the end of this time period, whatever time period you want to, compare the two against, at the end of the period, if I'm practicing the infinite banking concept, all of that cash value and dividends would accrue to me. If I'm borrowing from the third-party lender, all of that cash value and dividends is going to accrue to them. Well, James, the bank's not buying life insurance. I get it, but the bank pays dividends, right? Your bank pays dividends. They just don't pay you a dividend because you're not the owner of the bank. And then all of that, the bank's taking advantage of that velocity over and over and over and over and over, and they're going to profit from it. And that's just in the automobile. Everything we purchase is financed, and the banking function exists. Banking exists, and somebody's going to profit from that. And it might as well be you. And you might as well profit in a way that you can access all of that capital tax-free, either in this generation and the next generation. So it's a win-win. And the only addition there is the honest banking. Buy, borrow, repay, and die. Buy, borrow, repay, and die. I like that. And then you said...
And like Nelson would say, right, pay yourself more than you'd pay somebody else, because, again, why wouldn't you if all that extra is... if you have room in your policy and you can do it, then you pay more than is due.
Exactly.
And fill up the paid-up additions as much as you can.
Right. And then if your policy's full, start a separate segregated checking account and let the bank do the accounting. And you can follow your cash flows. You will naturally see when you need to expand and buy another policy. Just don't be forced into that position, right? You should choose. No question. It's like, I get it. We can get a 30-year mortgage for 2.9 today. I get it. Lowest interest rate environment ever in all of recorded history. Well, pray tell, what's the interest on the credit card the average American owns, right? They'll pay 15, 20, 29% interest all day long, and they're valuing the third-party lender's money at that rate, or they wouldn't be paying it, right? And then they probably really don't even think through that whole process. So the third-party lender's money that didn't exist until you signed your John Henry on the loan document is valued at 20%, and your money's not worth that. Of course your money's worth more than that. So this does give you kind of a guide or a barometer, a way to measure the value of your money and your cash flows. And once you see that, it's like, oh, no, wait a minute. I'm trading my time, my experience, my knowledge, and I'm taking it away from family or things that I love to create this income and to create this cash flow. It's valued much more than 20%. So, you should just recognize it and act like it, in my opinion.
Yeah. Well, I like that you added that repay part, because I think that also just illustrates, again, another principle that you share, which is, that, sometimes the policy design is less important in the end when it's really about your behavior and how you value what you've created and whether or not you respect the idea of paying yourself back. So I think that repay, I'm going to add that in. So now it's yours. It'll be your little...
It's modified, right?
It's modified. But I think that is really important. I mean, it does feel kind of, juicy and desirable to take all this cash value out and never pay it back. But, that's not really the purpose of it, right? The purpose is to, use it when you would need it normally, not to go be frivolous and buy things that you wouldn't have bought anyways, but to use it for the things that you were planning and to just be your own banker.
Yeah, that's a real pitfall, because we accumulate the capital with such ease of access to it. Then we're benevolent. We like to help friends and family, become your own banker. We finance things, and then there may not be a formal agreement, and you're not really going to repossess anything from your friends and family. You got to be careful with that. And then everything walking down the street is not a deal. If you're in the real estate world, everything walking down the street is not a deal. This gives you the opportunity to enhance your skills to even recognize opportunities, in my opinion. Yep,
yeah, I mean, if it's not going to make more than what the current dividends are, then why, don't move it. And I think you said that earlier too, which is, something I think most people don't really think about their IRA and their retirement plan as an investment. And I think you've said it many times and others too, right? An investment has the risk of loss just as much as risk of gain. And it's like buying a house. We all assume your price of your house is going to go up, but if you've lived long enough, you've seen that that's not always true. And, it's one of these things that, you do want to be very smart with the capital you've created and, put it in a place that you have the most control and that you make those investing decisions knowledgeable that there can be loss, not just gain.
Yep. I love that. And this is, you don't have to answer this too, but have you ever just taken a loan just to see how easy it was and repay it?
Well, we got to actually filled out loan paperwork this morning. So,
okay.
So I did, but yeah, I helped Marcus when we did the first one. We kind of walked through it together. The team at the office sent us all the paperwork, but I mean, and we did see there was a way to do it online too and just have it automatically. But at the time we were paying off something bigger than what was available online. So, so the office helped us out with that, but it was really painless, very painless.
Perfect.
Yeah, you guys make everything painless, so it's
except for reading and educating, right? Taking the time to do due diligence. Yeah, we like to.
That's on us, yeah.
Yeah, we like to make it easy. I mean, we like to be easy to do business with and interact with. There's no question about that. I mean, customer service, client service. I mean, that's important. I would like to touch back on, you made a comment earlier about your father. Your father, when he turned 72 and a half, he had to take his required minimum distribution and did not want the money. I don't want the money. But he had, and we all have to, 70 and a half then, now it's 72, right? You have to take your required minimum distribution from qualified plans, because Uncle Sam wants his share.
Yeah.
Right? And I have a lot of clients that are, in that situation, and they did everything that the financial, community taught them to do, right? Save, which is important, invest in qualified plans. And it was always under the assumption that when you retire, if you save 10% in a qualified plan, you're going to become a millionaire when you retire, and you're going to be in a lower tax bracket. And the question is always, which one happened or which one didn't happen, right? And so most of their money's in their home or their qualified plan, and they have to take it out and pay taxes on it, and then they have nowhere to put it in a non-qualified account other than a savings account or give it away, right? It's like you really don't have control because you didn't have a choice in that. And now a lot of people may need that money to live on, no problem, right?
Yeah, for sure. And that was just, he hadn't needed to take it out yet. I mean, he was just felt like the longer I keep it in there, it keeps growing. But why would I want to take it out? But like you said, it's just, those are the rules. And, we all sign up for that when we sign on the dotted line to get involved in those, probably not really understanding that. And again, in your 20s, in your 30s, 70 seems like a long way away. You can't imagine that you would ever, I think it's also that lie around, and I believed it. I mean, to be honest, I just believed it. Like, I couldn't really fathom, of course, when you're older, you'll be in a lower tax bracket. And I think, I don't know if it was one of your videos or somebody was just like, why would you want to be in a lower tax bracket? Like, why is that a selling point of these plans? And I just think when you realize you have already been diligently saving and that there are caps to what you can save, and then you have to try to find some other way to save, and maybe you do a Roth IRA, and that's great, and fill that up for as long as you can. But if you become more successful than those limits, then you're capped out there. And those caps, you're, like you say, if you're a producer, whatever you're producing, and that's how that multiplier is worked out, that's how you can build your bank. These rules are made for everyone, and if you're at a certain income, you will cap out. You will put enough in those, and you can't do any more. And how is that fair to you? Who will likely need more in the future? And you always say, pay the taxes on the harvest or the seed, and that those are just the concepts. These little nuggets that you say over and over. You really need to really ponder on those, because I think once you understand those little things that you say, like, they're really deep and they're really profound, and those are all the little things that stack up. And most people do look at, oh, I have $1 million or I have $2 million in my retirement plan. Isn't that amazing? They've worked 50 years for that, and then they have to pay tax on that. So it's like, nope, sorry, you don't actually have as much as you thought. And then all the fees on the back end, and I mean, just all those pieces of the invisible erosion of your capital that happen inside those accounts. But I get it. People feel trapped. They don't know what else to do. And I felt that way too. And so, you do what you do till you know different. And luckily I found something different.
Right. And then when you know better, you should do better, right? Mm-hmm. I love that. You're awesome. You're going to have to come back because people need to hear you. You're welcome.
It's been fun.
It has been. Any other closing comments? Burning desires?
No, just good luck to your editors on putting all this together. I don't know how they're going to do it, but you're in good hands. Yeah,
I don't think you said anything that we can't share, so the editing shouldn't be hard.
Just a little all over the place, like, oh, we should talk about this, let's talk about that. But
perfect.
Yeah, no, happy to be here, happy to, just share my perspectives. And, I'm still an infant when it comes to all of this, but, we're practicing and we're learning to walk, so.
Good job. Thank you very much, Kathi. I greatly appreciate your time and you sharing with us. And I know people are going to love it and they're going to want to hear you again. So,
thanks.
We'll
I'm happy to come back.
Okay. Well, have a great rest of your weekend. Okay.
Thanks. You too.
Welcome.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.